Hello everyone, I am Pratap here. We are at fourth practical session of lesson 9. So in this practical session, we will identify the zone strength with examples, and we will also identify the trend based on zone violation, and we will also look into one more example about how to trade with zones by calculating a risk reward. But all these concepts are having dependency on your earlier lessons of phase 1 training program. In case if you are directly get into this practical session, please go to NeoStock YouTube channel and click on this home page and scroll down to the playlist supply demand zone price action course. So this is the playlist. So I'm right clicking on this playlist and opening in a new window. So all our earlier lessons of this phase 1 training program are available. You just scroll down and starting from lesson 1.1 and till the lesson 9.3, and this session is going to be the lesson 9.4. So please complete all these lessons one by one. So far we have completed 18 videos and this is the 19th video, and also this is going to be the last practical session in our course. I mean the first phase of our training program. So as I already announced, the second phase of our training program will start from the first week of December. So now let's get into the practicals. And we already learned 5 different types for identifying the zone strength. So we already learned zone strength is identified based on the leg out formation, the leg out of a zone, maybe a demand zone or a supply zone. So what are the 5 things we have learned for identifying the zone strength? One is a leg out with high explosive. The second one is a leg out with gap. Third one is a leg out with follow through. And fourth one is leg out without follow through. And the last one is leg out with sluggish. So let us identify some demand and supply zones, and we will check what kind of leg out they are having. So this is a crude oil chart. So here I can identify a drop candle and 2 base candles and again a drop candle. So let me draw the supply zone. So this is the supply zone, and look into this leg out. This is much bigger than the other leg out candles. I mean the large leg candles. Look into this. This is a large leg candle. This is a large leg candle. This is a large leg candle. Even this is a large leg candle. Compared to all these large leg candles, this leg candle is much bigger. So you have such a big leg candle, we can call it as a leg out with high explosive. If a zone is having a high explosive leg out, mostly the strength of the zone is excellent. See here, after this supply zone creation, prices again went back after its first test. See here the fall from this supply zone. So this is the advantage of finding what kind of leg out we are having. So this is an example for leg out with high explosive. And let us draw one more supply zone. Let me look into some other chart. Let us get into Nifty. See here we have we have a drop candle and then we have base candles, and see this leg out with a gap, with a huge gap. So this indicates a leg out with gap. Leg out with gap. This is another example. Sometimes in the previous lesson I told you, sometimes we may get some confusion. In identifying the leg out candle, it looks like a base candle. Because of the gap, you need to consider from the previous candle till this candle, within this gap, the entire thing should be considered as a body. That is what I told you, invisible body, a candle with invisible body. So most of the times you might see such kind of leg out candles when there is a gap. And we consider this gap as a pro gap, professional gap. And another example is a leg out with follow through. Follow through means we have a leg out candle, and after the leg out candle, the next one is also a leg candle. Maybe it could be a medium size leg candle or it could be a large leg candle. But the follow through candle is also a leg candle. Look into this example. Let me draw the zone. We have a drop candle and then we have two base candles. Now we have a leg out candle and then we have one more leg candle. After the leg out, the next candle is also leg candle. Then we can call it as a leg out with follow through. The previous one is leg out with gap. When there is a leg out with gap, you need not bother about the next candle, whether it is having follow through or not follow through. The gap itself is a good indication, professional gap. But here we have a follow through candles. And what is the next example? Leg out without follow through. Leg out without, let me check. Without follow through means after the leg out, here, look into this. We have a leg out candle. This is a demand zone. We have a rally candle. That is the leg out. After this leg out, the next candle is not a leg out candle, it is a base candle. The next candle is a base candle. So there is no follow through candle. So if leg out with follow through, the zone is not a excellent zone, but it is a good zone, a tradable zone. See, next time prices came, but given some profit. It has given some profit here because there is a supply zone here. Let me mark, change the color. So we have a drop, base, drop. So why I am saying this is a good zone? Because excellent zones, leg out with high explosive, leg out with gap, leg out with follow through. All these three are excellent. The strength of the zone is excellent and it is a tradable zone. But if after the candle, if you don't have a follow through candle, follow through means that next one also should be a leg candle, but here it is not a leg candle, it is a base candle. That means this is a leg out without follow through. Maybe the strength of this zone is not excellent, but it is a good. The strength is good. So strength is good is also a tradable zone. See, that's why it is a tradable. It has given some result. Maybe a least profit, but it has given some profit. After that, this zone is broken. So this is the difference between leg out with follow through and leg out without follow through. This is leg out with follow through. We have a leg out candle. After that, the follow through candle is also a leg candle. But in this example, after this leg candle, after this leg out candle, the next candle is not a follow through leg candle. It is a base candle. That is the difference between leg out with follow through and leg out without follow through. So these are the first four types, and fifth one is leg out with sluggish. Let me remove these drawings. Look into this example. Let me draw. Here you have a rally candle and we have three base candles and we have a leg out candle. See, after the leg out, you don't have a follow through candle. The next. But what you have within this leg out itself, you have some price movement. Within this leg out itself. If the price movement is inside this leg out, if the price movement is inside this leg out for the next few days, maybe next 1 day or 2 days or 3 days, if the movement is inside this leg out, then we can call it is a leg out with sluggish. Such kind of zones are called weak zones. Weak zones are not tradable zones. They can easily break. See, next time when prices enter into this zone, the prices moved sometime inside this zone and after that easily it is broken. So easily the prices have passed through this zone and finally this zone is violated without giving any result. So that's why leg out with the sluggish is a weak zone and it cannot be tradable. That is what you have seen in the live charts. You may ask a question, leg out with sluggish will always be broken? Maybe sometimes it may give some success, but the chances are very rare. There could be other reasons for that success. But most of the times, the situation is they will break easily. That means the zones will be violated. So these are the 5 examples for 5 different types of leg out candles that defines the strength of the zone. Hope you understand these examples. If you have any doubt, again go back and go through these examples once again. Now let us discuss about the trends, identifying the trends based on the zone violation, because identifying the trend is very important. It's a highly important concept. In the next phase of the training, you will be learning few strategies, basic strategies, the second phase of our training program. So at the time, trend plays the major role. Remember, without the trend, you cannot buy or you cannot sell. That means you should not go for long trades or you should not go for short trades without identifying the trend. Trend is such an important concept. So previously we have practiced for the concept calculating the trend based on swing highs and swing lows. Now we will be looking into the practical session for identifying the trend based on the zone violation. This is purely demand and supply zone specific. So first let me take Nifty and let us identify the strength. So I will take three indices. One is Nifty, another one is Bank Nifty, and another one is NASDAQ for US stocks. All these three are indices. For all these three indices, let us identify the trend, latest trend. What is the latest trend? That is the goal. We are not looking into the trend for the past 1 year or 2 years. We are not going to do that. Let us understand, because this is a simple way we can identify that trend based on the zone violation. Zone violation already have seen in the previous practical session. Zone violation helps in identifying zone achievement. That is what you have seen. Now you are seeing second importance of zone violation. Zone violation not only helps in achieving zone achievement for its opposing zone, zone violation also helps in identifying the trend. That's why zone violation is a very, very important concept. This is the second practical uses of zone violation, but this time in terms of identifying the trend. Let us assume when prices, see here, prices going up, by the time it reached this stage, let me draw a horizontal line. Now by looking into the chart, without any analysis, because market reached at the all-time high, so easily we can tell the trend is uptrend at this blue color line area. Okay, from at this point of time, we all agree the trend is uptrend. Now let me draw, now market is going down. After going down, again it is going up. Let us see how trend is changed from uptrend. So definitely we can say this is the first supply zone created at this level, and this supply zone pushed the market down. Okay, while pushing, what we might have observed, here there is a demand zone. When prices are falling down from here, let me hide the previous data and look in this swing. Let us draw the zones. Here we have a demand zone. Let me change the color. So this is the demand zone. We have a rally, base, rally. And we have another demand zone. We have a rally, 3 base candles and rally. And this supply zone, sorry, let me change the color. Okay, let us move the prices. Now what happened? This first demand zone is broken. When a demand zone breaks, that means violates, what happens? Its opposing supply zone, its opposing zone, because this is a demand zone, its opposing zone is a supply zone. That supply zone gets a zone achievement. What is the achievement? Violated opposing zone. That is one thing happens. What is the second thing happens? The trend will be changed. The current trend will be changed. Because the current trend is uptrend, after breaking this first demand zone, the trend will be changed to sideways. Because uptrend never be changed to downtrend directly. That is what you learned already. Similarly, downtrend never be changed to uptrend directly. What is the rule? First, a downtrend changes to sideways. Similarly, if the trend is uptrend, the uptrend changes to sideways. Okay, when an uptrend changes to sideways, when the first demand zone is violated. Here the first demand zone is violated. So uptrend is changed to sideways. Suppose if it is a downtrend, when a downtrend changes to sideways, if the first supply zone is violated at that time, the downtrend is changed to sideways. In this example, the trend is uptrend, so uptrend is changed to sideways the moment first demand zone is violated. Okay, after that, observe the prices. Now, second demand zone is also violated. Violated means two ways, completely violated or it can be pierced. Whatever happens, the trend will be changed. Now, in the first demand zone is completely violated, second demand zone is pierced. So, the moment this demand zone is pierced or violated, whatever happens, in that case, whatever first happens, directly violated or pierced, whatever happens first. So, here pierced happened. So, immediately trend is changed to downtrend because first demand zone trend is changed to sideways, first demand zone violation, second demand zone violation. Now the trend is sideways is changed to downtrend. Right? Okay, now the trend is downtrend. Now let me delete these demand zones. Now after this the trend is down. Now what's happening? Are there any supply zones here? Yes, there is a supply zone. A supply zone with sluggish. Let me change the color. Okay. Now after that what happened? The prices are moving up. Is there any demand zone created here? No, because there is no base candles. Don't assume all these candles are base candles. Always you should know some candles, when there is a gap, candles will be having invisible body. So if you add this invisible body, this is a leg candle. Again, if you add the invisible body, this is also a leg candle. Again, if you add invisible body, this is also a leg candle. This is also a leg candle. Leg candle. Again a leg candle. This is a leg candle. Now a base candle. Now we have a, again with this leg. This is a leg candle but not qualified enough to create a demand zone. It's not qualified. This is a medium size leg candle. So we have again a base candle. You have invisible candle you can add, but still the size is not very big. So what you can do, again you can draw a supply zone here. But even before that, this supply zone is broken. The moment this supply zone is broken, downtrend is changed to sideways. Now at this point of time, this supply zone is violated. So let me delete this supply zone. But before deleting, the downtrend is changed to sideways. Now after this candle, what happened? a zone, again another supply zone is created. Here we have a supply zone. So this is a good enough. This candle is a leg out candle. And then we have another, because you cannot add invisible body here. The reason is the gap is not sufficient enough from the previous close. Already the wick passed inside this. So what I can do, I can draw one more supply zone. We have a supply zone, one more supply zone. So are there any demand zones in this area? No. So now at present the trend is sideways. The sideways trend, because we didn't find any, it only violated the pivots but not the zones. Trend will be changed as per zone violation. Trend will be changed only after zone violation, not violating the pivots. Violating the pivots is based on swing highs and swing lows. So we have next demand zone only here. Because there is a gap, we have some invisible body we can add here. So this is sufficient leg out. If this demand zone is violated, then sideways would have been changed to again downtrend. So still maintaining the sideways. Now this supply zone is violated. The moment the supply zone is violated, now trend will be changed to uptrend. One more supply zone is violated. Anyway, the current trend is uptrend. Even after violating one more supply zone, still same uptrend is continued. Now at this point of time, the trend for Nifty is uptrend as per the zone violation. This is the way we can understand the trend calculation based on the zone violation. So at present, Nifty 50, the trend is uptrend. So recently, the trend is changed to uptrend. What about Bank Nifty? Let us calculate Bank Nifty also. I know some of the people are, anyway, most of you are learning demand and supply zone, but some people who already learned demand and supply zone somewhere else, they are also again attending the complete course. They might be already trading because they already completed courses from somewhere. They are already trading. For them, probably these trend calculations will be helpful for their trading. But remaining people, you are learning. Those whoever is learning, I already gave you advice. Do not go for the trade until you complete the second phase of the training. Go for the trading with a complete proper skills. Those who learn from outside, from some other places, and they are again attending because our course is providing more in-depth knowledge. Because I am always explaining the concepts from the roots. That is the way I am ensuring the foundation of your subject is much, much stronger. If the foundation is very strong, later on the advanced concepts or strategies, advanced strategies, you will be able to understand easily. That's why I am ensuring the foundation, your foundation is very, very strong. That's why I am taking enough time. I am giving you enough time to learn these concepts. Those who directly jumped into some of these lessons, please go back. My advice is go back, attend right from the first lesson, 1.1. First lesson we have 3 parts. Even though some of the concepts you learned, please repeat again. Because every lesson you will be learning few new points. If you already learned, still you will be learning few new points. That is what I can give you assurance. Those who are learning first time, no issues at all because they are learning everything step by step. Okay, now let us find the trend for Bank Nifty. Let us assume by the time prices reach to this location, the trend is uptrend because market is at high. Let us assume the trend is high, uptrend. Now let us check how the trend is changed from here. So the first supply zone is created here. We have a rally candle and then we have 3 base candles and then we have a drop candle. Do not consider this as a base candle because this candle is having invisible body due to the gap. If you add that invisible body, this entire candle is looking like a drop candle. So it is a leg out with gap. It is a leg out with gap. It is a high explosive after adding invisible body. And also it is having follow through candles. See how many conditions met here for this supply zone. Let me change the color because this is a supply zone. Okay. So is anything happened before this? Yes, there is a demand zone. We have a rally, we have 3 base candles, we have again a rally candle. So rally, base, rally. So this is a demand zone. Let me change the color. See, this candle is also, next candle is also having invisible body. See, from here, you can add the invisible body from the close of the previous candle. Then it is looking like again, a rally candle. So we can add one more demand zone here. So this is the first demand zone, this is the second demand zone. After that, the first demand zone is broken. Immediately the trend is changed to sideways. Now let me delete. After that, this demand zone is also broken. Now trend is changed to downtrend. Now we have again invisible body from here. We have again a drop candle. So let me draw one more supply here. Let me change the color. So we have a supply zone, red color. So the trend is still downtrend. See here, we have one more demand zone here that is also broken. Let me change the color. We have a drop candle. We have 1, 2, 3, 4, 5, 6 base candles. And again, we have a rally candle. Prices came, went up. Prices came, went up. So sometimes prices are within this zone, demand zone. After that, again, prices within this zone. I already told you in the last session, there are some zones will be tested multiple times. We call them as high liquidity zones. Such kind of zones will give profits again, and again. You will be learning such kind of zones in the third phase of your training program. That is advanced strategies. But finally, that zone is broken. By the time this zone is violated, already trend is changed to downtrend. So that's why the same downtrend will be continued. So while breaking this demand zone, a new supply zone is created. Let us draw. Let me change the color to red color. Okay, now this let us delete this demand zone because it is violated. Now this is the first time. This is the first time this supply zone is violated. First time means when the trend is downtrend. When I say first time, when the trend is downtrend or when the trend is uptrend. At that time, the first time a zone is violated, that time the trend will be changed to sideways. So now downtrend is changed to sideways. But is there any demand zone available here? Check, this is an exercise for you. See, when you learn everything with examples in the PPT presentations, it looks very clean, neat, and you feel like everything is so easy. Because that is the way we have to explain. Because if you explain the concepts in the early stage with complications, you don't understand the subject. That's why I'm ensuring first time when you're learning, everything in a neat and clean way you're learning. But in the practical lessons, you might have already learned the concepts. Now that is the time you need to encounter some difficulties. Now difficult situations you need to understand. When your foundation is very strong, next time easily you can understand even if you encounter few difficult situations. Because by the time you might have got the clarity. That is the reason why in my PPT lessons, I'm ensuring all the concepts are explained in a neat way. Why I kept practical lessons? Now by this time you learn the fundamentals. When you look into the real charts, definitely certain places you get some confusion. Even then you will be able to understand because you already completed your fundamentals. That's why I'm always saying first you complete the course completely and then get into the practicals. Because we are learning the concepts in a structured manner, step by step you are learning. Now my question is there any demand zone available? How all these candles are looking like? They are looking like some base candles, base candles, base candles. But last session already I told you, when there is a gap, you need to add some invisible body. Here I already identified one demand zone. So you have a drop candle here. See here, you have a drop candle. And there is some gap. Even if you add the gap, invisible body, still this candle is a narrow range candle, not even medium size candle. It is a small candle. Small candle, whether it is having body, complete 100% body, or it is having 50% body, or it is almost having 0% body, whatever it is, narrow range candle, small candles is always a base candle. Even after adding invisible body, still it is a base candle, small candle. And after that you have one more candle. It is looking like a base candle, but if you add the invisible body, then the candle will start from here. Let me draw the blue color line to avoid the confusion. See, from here the candle body will start. Or you extend the candle, it looks like a expanded range candle. Expanded range candle, is it medium size or large size? See the entire range of the candle from blue color till this point. It is a large candle. So definitely this will be qualified as a leg out candle. Let us add some rectangle body here, from here to here. See, already it is having this much body. Again, on the top, some more wick is there. Because this is a large candle, you need not worry about whether even if the candle body is less than 75% for large candles. This is bigger than the medium size candle. That's why what you can do, we delete, you can draw a zone. You have a drop and then you have a base. Let me change the color to green color. Let me delete this blue color line. Now see here, you have a drop, you have a base, and then again you have a rally. Drop, base, rally. Sometimes you will be seeing such kind of demand zones. For normal people, it doesn't look like a demand zone at all. You know, most of the time what institutions will do, they will find such kind of, they will create such kind of demand zones so that you may not recognize as a demand zone. You won't keep any orders. Generally, when you keep orders, what happens? Your orders will avoid execution of institutional pending orders. What you do? You may keep as a little higher than institutional pending, maybe at the border of the zone, or little, or few paisa, or few cents if it is US dollars above this zone. So by the time the prices enter into this zone, some of your orders already consumed the existing supply. So supply might have been weakened. And without executing the remaining institutional pending orders, only few orders will execute, push the price up. So to avoid such kind of issues, institutions sometimes create some kind of hidden zones. We can say it is kind of a hidden zone. Like how you land hidden body, this is also hidden zone. If you are not aware of this hidden body, you won't feel there is a demand zone available. That's why I can call this as a hidden demand zone. But those people who are aware of this hidden candle concept, then they will be in a position to identify these hidden demand zones. And most of the time, such kind of hidden demand zones will work. Most of the times. I'm not saying every time, because there are other concepts you should learn. They should also support. And if they also support, then this zone will be having higher success rate. That means in today's session, you already, previous lesson you learned hidden candles, now you are learning hidden zones. For a normal eye, it doesn't look like a demand zone. But the moment you understand all these hidden body, candles hidden body, first time generally, I'm sure when I ask the question, is there any demand zone? I'm sure most of you might not have identified this demand zone. Now you land, now you will be in a position to identify such kind of demand zones. Okay? Okay, you also might say there is already one more demand zone. This is a LOTL concept. You already learned LOTL. Here we have a drop candle. So we have already having a demand zone. But in drop base rally, you should consider the low of the leg out, leg in and base candles. Among all three, leg in is having the low. So you have to draw such a big zone. So inside this demand zone, you have one more demand zone. This concept is called LOTL concept. Either the zone should be completely inside, or the zone should be overlapped with this demand zone, or the gap are completely outside but the gap is very minimal, negligible. In all the three scenarios, we can call it as a LOTL, level on the top of the level. So you already learned this concept. But why I am concentrated on this, the hidden zone? Because you should learn this concept. Because I have observed such kind of zones are having more success rate. That is what I observed after I developed the software. Okay. So this is after this zone gets the zone achievement after violating this. And because the first supply zone is violated, and who is the responsible for this violation? This zone, or maybe the LOTL. Both the zones are responsible because in LOTL, both will get zone achievement. And finally, the trend is changed to sideways. After violating the supply, now let us delete. The downtrend is changed to sideways. So the trend of the bank Nifty is sideways. So let us look into one more example on NASDAQ. Similar to Nifty 50, NASDAQ is also an index for the US stock market. So what is the trend? See, by the time when prices reached here, it is a downtrend. Previous examples we calculated from uptrend. In this example, we'll calculate from downtrend. Let us assume here, by the time prices reached here, the trend is a downtrend. Let me draw the horizontal line here. So at this point of time, the trend is downtrend. Let us assume. Because we are not calculating just by seeing the structure itself, we are in a position to tell. Lower highs, lower lows based on that. Now, as per demand and supply zone, let us understand how the trend is changed. Okay. So first let us understand the supply zones. What are all the supply zones available here? Let us draw all the supply zones. So here we have a supply zone, rally, base, drop. Let me draw. Let me change the color. Red color. Okay, this is the supply zone. And what is the next supply zone? So we have one more rally, base, drop. This is another supply zone. Let me hide the prices even before that. So let me draw one more supply zone, drop, base, drop. This is one more supply zone. And any other things we can see here? There is a drop, base, drop, but I am not convinced with this leg candle. The leg candle is medium size. It's not this leg candle is looking like a medium size. So what I can do, I can draw a demand zone here. We can draw the demand zone. Drop, base, rally. Let me change the color to green color. Let me change the color to the green color. So we have a demand zone is created. It is a newly created demand zone. But again, this demand zone is also violated. That means the downtrend might have been further continuing here. So that is a hook. So this demand zone is no more valid. But are there any supplies here? We can draw one more supply zone here. We have a leg candle, medium size leg candle. We have 3 base candles. So we have a supply zone here. Let me change the color. So what is this concept? LOTL. Previous example you have seen LOTL, the zone is completely inside, but in this concept, the demand both are overlapped. That is also LOTL. If it is completely outside, if the gap is minimal, that is also a third scenario. Previously, you have seen example for the first scenario. This is the example for second scenario. If both together violated, then only trend will be changed. That concept I explained in our last theoretical session before starting the practicals. So this is no more valid, this demand zone. But again here we have this candle is looking like a ERC candle. It's not very convincing, little bigger than the medium size candle. If that is the case, we can say rally base drop, something like this. One more supply zone. Now the first demand zone is created here. After the downfall, from this blue color, we have already drawn this blue color. So by the time prices reach to this blue color area, the trend is downtrend. Now let us draw this demand zone. Because this is a drop base rally, let me change the color to green color. Now what happened? The first supply is broken. The first supply is broken. Now downtrend will be changed to sideways. Now trend is changed, downtrend is changed to sideways. And who is responsible for changing? This demand zone is responsible. Now this demand zone will get zone achievement, and also now the trend is changed. Because of the supply zone violation, two things are achieved. One thing, this opposing zone, for the supply zone, this demand zone is opposing zone. So the moment the supply zone is violated, its opposing zone got the zone violation, zone achievement. The name of the zone achievement is VOZ, violated opposing zone. So it got the achievement. Demand zone got VOZ as a zone achievement, violated opposing zone. Okay, and after that what happened? Prices entered into this supply zone, LOTL scenario here. But that is also broken completely. See, in this candle, the latest candle, the rally candle, completely violated both these LOTL zones. The moment both the zones are violated, what happens? The trend will be changed. Is there any new demand zone available here? No, we haven't seen any demand zone. See, we have a rally candle, we have a base, but we have a candle. So this is not, but this candle again a drop candle. Next one is again a rally candle. This is a leg candle, next one is a leg candle. In between these two leg candles, there is no base candle. If this leg candle is a medium size level, most of the times you can include it within the zone itself. But I am not really convincing this is a medium size or it is a something. I am not convincing to draw a zone here by including this candle. If it would have been a little smaller, I would have kept it as part of this zone. Even though this is a medium size like candle, because there are base candles. Sometimes it happens. Sometimes within the base candles, you may get a medium size candles, like candles. You can put them in the zone. But anyway, not really. I am not really convincing to include inside this zone. Otherwise, if you consider this is a leg candle, 1, 2, 3, 4 together you can create a base, but somehow I am not getting convinced. So I am assuming there is no demand zone here because of this. This is a little bigger than the medium size candle. Only medium size leg candles you can include in the demand zone if already base candles are there. Otherwise, this is one new point you are learning. Please concentrate. Assume its size is some more smaller. Now it is looking like a small, medium size leg candle. Then you can include them as part of the demand zone. This is one exception you can take if already there are some base candles are available. Sometimes you can consider that rule. We didn't discuss this rule during our main course because at the time I don't want to create any confusion while learning the fundamentals. Now you are seeing the practicals. Sometimes in the practicals we can take few deviations. And I am not convinced with this candle to consider the deviation. That's why there is no demand zone as per me. If anybody can consider, okay, you can create a demand zone here. But for me, still only this demand zone is there. Now this demand zone is responsible for violating two supply zones. This is the first supply zone. This is the second LOTL supply zone. After this first supply zone, what happened? Trend is changed to sideways. Now after violating these LOTL scenarios, now the trend is changed to uptrend. Now this third one is also violated. Now uptrend is still continued. Uptrend is continued to uptrend only. That means at this point of time, the NASDAQ trend is uptrend. So this is how you have to calculate the trend based on the zone violation. Same way you practice by whichever your favorite stocks are there, take those stocks and practice. Go to some extreme in the charts, go to the extreme points. See, the blue color line I have drawn is an extreme point for the swing. This entire swing is ended here. So I'm assuming by this time the trend definitely it is a down. Now you start calculating. Similarly, other stocks also I did the same. For Nifty also, I took the extreme level. Moreover, this is all-time high. By the time prices reach all-time high, mostly the trend will be uptrend, mostly. That way we analyzed how the trend is from here it changed to sideways, down, again from down, again trend is changed to sideways, and then uptrend. We have seen such kind of scenarios. Similarly, we have calculated for Bank Nifty also. Both Nifty and Bank Nifty we have taken from extreme upside within the swing, and similarly for NASDAQ within the extreme downside within this swing, and then we calculated. Hope this information is useful to you. Now what we do, let us calculate one example for risk reward once again, because that is the ultimate, how to trade. One example for trading point of view. Okay, let us take this example, Bank Nifty example. I know some of you means who already learned the course and attending second time, probably you might be trading in Nifty or Bank Nifty, let us say. Already it happened, move happened. So you might have missed this short opportunity, because maybe 3-4 days back, if you have calculated, maybe you would have got this opportunity. Now anyway, after few days, let us assume prices are entering into this demand zone. If anybody wants to take a trade, please remember, those who are learning the first time, do not take the trade here, because you didn't learn the other concepts. You never know. this is a good zone or a bad zone, based on the phase 2 training, whatever you are learning from that point of view. But those who already completed the courses and again second time, because they already learned some of, probably the phase 2, some of the phase 2 concepts also they might have learned. Maybe some new concepts they will be learning in phase 2. At least they have some clarity to find this zone is really a considerable zone or not. But for you, this is a blind trade. Remember, you have to do only paper trading. I already explained what is paper trading. You just note down on the paper or in an Excel sheet. And you want to take a trade here. You assume I am taking a trade. If it is successful, how much profit I am getting? That way you will try to apply the concepts you learned so far. That's it. But not the real trading. Okay, assume we want to take a trade. Are there any supply zones in between? Let us check. Any newly created supply zone? Yes, one more supply zone is created, LOTL supply zone. What is that LOTL supply zone? We have a rally candle. See the hidden body from here to here. And then we have a base candle. Let me change the color. And then we have a drop candle. See, this is LOTL scenario, level on the top of the level. So what is the risk? What is the reward? Now reward should be changed now because LOTL is there. Your reward is going to be, let me draw the trend line as a straight line. This is only going to be your reward. What is our risk? This will be our risk. If you go for type 1 proximal entry. If type 2, if you want to go to type 2, your risk will be further reduced. Your risk will be only this much. And moreover, type 2 and type 3 are almost similar because the candle body is very, very negligible. Probably the risk for type 2 and type 3 will be almost same or they are very close. So let us calculate type 1 risk and type 2 risk. Type 1 proximal entry and type 2 proximal entry. Of course, reward also will be changed. What is the reward if you go to type 2? Let us draw one more line. So from here to here. So some more a little extra profit you will get. So let us look into the type 1 risk. And please do not use any tools. You have to calculate manually. Maximum you can take the help of the calculator. That's it. Some of you are aware of the tools because already you might have learned earlier some of the courses. You learned about how to directly calculate the risk reward with the help of the tools. But my suggestion is don't use any tools. If you are using the tools, your better way of thinking might reduce. I don't want your mind should be inactive. I always want your mind should be active. Our mind will be active when we do more calculations by our own. So I will explain the tools because after end of the second phase of the training program. Because at the time we are going to the real tools, at the time saving the time is very important for us. But at the time of learning, never look for shortcuts. Saving time is not important at the time of learning the subject. So whoever is learning first time, do not look for any tools. So I will be happy if you are not aware of any tools now. Just take the calculator. Okay, what is the risk for type 1? The high of the zone and low of the zone, because we have only one candle, the high of the candle and low of the candle. I hope you know how to identify the high and lows. The moment you place your mouse on this candle, where your data is available? At the top, Nifty Bank, 1 day chart. This is 1 day chart, NSE. Are you seeing this? There you are seeing open, high, low, close. So every time when I am changing my mouse, those values will be changing. Whichever the candle I am currently keeping, there you can see the high value and low value. What is the high value? 42,815.15. What is the low value? 42,589.65. So subtract both the values. So what is the first value? 42,000. 42,815. 42,815.15. Is it correct? Yes, 42,815.15. So minus, what is the low value? 42,589.65. So let us check, is it same? 42,589.65. Okay, now subtract. You got 225 points risk. You have to bear. So let me save this value in the memory, calculator memory, by clicking M+. Okay, this is saved. Now let us calculate the reward. What is the reward? The supply zone low minus this demand zone high. So in the supply zone, how many candles we have? Only one candle, base candle. So the low of this candle. So what is the low of this candle? 44,064. 44,064.15. This is the low of the supply zone. So then what is the high of the demand zone? So we have to subtract from this value. Which value? The high of this demand zone. What is the high of this demand zone? 42,815. 42,815 point 42,815.15. So what is the value? 1,249. Let me copy. So 1,249 divided by, already in the memory we saved, let me release the memory, MR. We got 225.5. So 5.538. Okay, 5.5 we take. It is 1:5.5. The risk reward is 1:5.5. That is the RR. For every one risk, we have 5 times reward. The 5 times is 1,249. If you get profit, you get 1,249 profit. If you get a loss, you get 225.5. You will get the loss. Assume you cannot bear this risk. Then what we have to do? We should go for type 2 entry. What is type 2 entry? Let us reduce. So let me delete this first trend line and also this. So this is the risk and reward now, if you are going for this kind. But there are higher chances that sometimes you may miss the entry. That is also possible if you go for. But if you cannot bear the risk, there is no meaning in taking the trade. Even if you miss, no problem. But you can't risk more money. Always remember, missing the trade is much, much better than risking a higher amount. This is fundamental principle. If you want to save your money in stock market, you should not forget this point. Missing the trade is better than risking more than what you are acceptable. You cannot bear the risk. You cannot bear that 229 points risk. Don't go for that. If something wrong happen, what happened? You will be losing more money from your capital. So type 2 entry. Let us calculate. Let me cancel, memory cancel also, because if I add again m plus previous value, the value will be added. So first let me cancel MC. So memory is cleared now. So first let us find the risk for this. So this is type 2 entry. What is type 2? The highest body. What is the highest body? Because this is the green color candle. Your open is less than close. Highest body means close of the candle. Here the close of the candle is, because this is a green candle, close of the candle. So what is the close value of this particular candle? 42,700.95. 42,700.95. Let me check again. 42,700.95 minus, what is the low of this candle? 42,589. 42,589 point low, 0.65. Let us check again. 42,589.65. Okay. See, now the risk is 11111.3, 111.30 paisa. 111.30 paisa is only our risk. Previously, you have 100 points more risk. Now, 50% of your risk is reduced. But at the same time, there are higher chances of missing your entry. That is also possible. But what is the rule we learned? Missing the entry is better. Compare it to accepting more risk than what you are affordable. You cannot afford 200 points risk. You can afford only 111 points risk. In such kind of situations, you have to take type 2 entry. In this example, type 2 and type 3 is almost negligible. Maybe some 10 or 11 points it might be reduced, because open and close are almost, they are very close. Okay, so 11.3, let me add to the memory for I'll say for saving purpose. So let me cancel. Now let us calculate the reward. What is the reward? Now this reward is still the supply zone low is not changed. That still remains, but your entry point is changed. So what is the low of the supply zone? 44,064.15. 44,064.15. Let me check, is it same? 44,064.15. Yes. Minus. So what is the highest body of this value? Highest body is in this place, because this is a green color candle. The close of the candle is the highest body in this example. If it is a red color candle, open will be the highest body. If it is a red color candle. If it is a green color candle, close is the highest body. Okay, what is the close of this candle? 42,700.95. 42,700.95. 42,700.95. Let us check again. 42,700.95. So you got 1,363.2. This is your reward. Now reward is increased compared to previously. You got maybe another 100 points reward. So this one divided by risk. What is the risk? We saved in the memory, calculator memory. Let me release the memory. So 111.3. So you got a 12, 1 is to 12. You got risk reward. Just by changing the entry, your 1 is to 5 is changed to 1 is to 12. Now we are getting 12 times more reward than our risk if this trade is successful. That means, first of all, we should get the entry. That means prices should enter into this zone. And after that, it should reach the target. So that is going to be 1 is to 12. So this is the way your risk reward will be adjusted. So those who wants to take a safe trade, if you get a loss, very minimal loss. If you get a profit, 12 times profit than your risk, you should not forget that point. 12 times more than the risk. So this is how you need to plan for your trades with the help of risk and reward calculation. This is our third example. In the previous lesson, we have seen one example. Even before that, we have seen one more example, first example. So please do your calculations exactly the same way. Because I'm explaining and then calculating, it is taking more time. But if you start doing the calculations, it won't take more time. But practice without taking the help of any tools. If at all any tool you are using, that is only your calculator only. Please remember. So when you do your own calculations like this, you get better control on the subject. Those who always use the tools for all the basic level things itself, yes, we have to use the tools once you get good experience, good control on the subject. Because by the time you got the control, taking the help of the tools will save your time. But without getting good control on the subject, if you are taking the tools, how you will get a strong fundamentals? One should have a strong fundamental base to get success in stock market. Let me tell you, why many people fail in the stock market is because they are having not strong skills. Why you are putting so much of effort for learning all these concepts, all these days? Probably by this time you might have spent over 20 hours of time only for attending the videos, all these videos. Apart from these 20 hours, you might have spent a lot of time for practice. So why are you spending so much of effort? Learning the subject is very simple. You just continuously listen without any breaks, 20 hours will be finished. But you might have spent, by this time, you might have spent over 50 hours or 60 hours. That extra time what you spend for practicing, that is helping you strengthening your fundamentals. And those people who are having strong fundamentals only will get success in the stock market. Not only in stock market, in any field. This is the fundamental rule. Most of the people, what they do, they feel hurry. They want to learn everything in just half an hour or 1 hour. And immediately they want profits. Is it practical? It is not at all practical. Those who are expecting instant results, they never get success. And the second reason for the failure in stock market. Actually, all these things I will explain in my next lesson, lesson 10. It's like a kind of motivation related session and also explaining about myself. There I will be explaining all the points, the reasons behind failures in the stock market. If you avoid all those things, you will get success. We have seen last 1.5 months, the trades we identified with the help of high liquidity zones, we have seen only 2 failures out of 40 plus trades, not 40, 50 plus trades. Last 1.5 months, we identified 50 trades based on the high liquidity, only 2 failed, remaining all success. And most of the stocks gave profit more than 6% during the intraday. Actually, they are all short-term trades. Next 3 days, 4 days, we should get the profits. Same profits we got during the intraday because of one powerful concept we identified with the help of our software. Human way of identifying is almost impossible for such kind of trades. Because I developed a strong, complicated algorithms, they were able to identify high liquidity zones. And if you want good success, you need to understand the concepts properly. Without understanding the concepts, you can't get the trades. You may ask a question, because we have a software, directly it will give just a small effort, we can get the profits. No, that is not possible like that. The software will identify the zones. Then after that, the risk management concepts, or whatever the concepts you are going to learn in the second phase of our training program, all again you have to apply, and then you have to fine tune the zones to minimize the risk. What is fine tuning the zone? That you will understand in the second phase of your training program. And all these concepts together will help you. Without knowing this concept, by looking into the high liquidity zone, you will not be in a position to tell where to buy and where to sell, and what is your stop loss. You can't assess properly. You have learned the first step of risk management in this particular course, the phase 1 of our training program. The second step of the risk management, again you will be learning in the second phase of the training program. If you are not having good knowledge on this risk management concept or risk reward calculations in the first phase itself, how do you expect you learn in a better way in the second phase of our training program? That's why I have taken example in our second practical session, third practical session, today fourth practical session. The reason why I repeated risk management, because it is the most important concept in your entire course. Always remember, you have to understand risk management is the top most important. Same thing again I will explain in our last session, in our lesson 10. Whatever the advice I am going to give you, there I will explain. There is nothing wrong in explaining the most important point, even 100 times. There is nothing wrong in explaining. And there is nothing wrong in listening also. Some points I am repeating third time, fourth time, fifth time means you should not get bored. You have to understand, you have to realize that is the important point. So I don't want you people miss that point. Anytime, even if you get up from your sleep, immediately you should be in a position to tell that point. Your mind should react. So to make you understand the importance, I am repeating some points again and again and again and again and again. It is a video recording. You can go back and you can listen 100 times, right? But when do you listen 100 times, go back and listen. At least if you can able to understand that is an important point, you can go back and listen. Instead of that, what I am saying, I am repeating at least 4 times or 5 times for some important points. Not every point I am repeating. Some important points. When I am repeating, you should not get bored, or you should not feel, I already learned and again I am learning. You should not feel like that. You should feel, it is an important point, that's why I am repeating. That means your mind should register that point. That is the main intention behind in repeating. Generally, what happened in the classroom lessons, we repeat third time and fourth time because that is not a video sessions. But this is a video session. I can explain one time and I can leave it. But I am not doing that. Because I know after listening the video again, you never come back to the video again. Am I saying wrong? I know most of the people, once you listen a video, again you don't look back into that video. That's why I know the human psychology. That's why I'm repeating some points again and again in several videos. Okay, anyway, please remember, you people are learning the concepts from its roots. I'm not just teaching the concept, I'm teaching the concepts from its roots. From that level, I'm teaching. And I also modeled this course in such a way how you people will able to learn the fundamentals in a strong way. Same concept I can explain, same course I can explain in a different structure. That is also possible. Mostly that is the commercial structure. But this is a free course. No commercials involved in this course. That's why I'm giving everything what I know. Because once I teach, that's it. Between you and me, there won't be any further relation. The reason is, you are learned everything. Now you will be completely focusing on your trading. Then there is no relation between you and me after completing this course. Then I have to explain everything in a proper way. And then I have to explain each and every point I am aware. I'm not saying I'm a great expert, know everything. Whatever I know, everything I'm explaining. But whatever I know, everything I'm explaining from its roots. Because any concept, when I learn, I have the habit of reaching its roots. Otherwise, I won't sleep. I go more deep into its fundamentals. Basically, I should know the reason behind that concept. What is the reason behind? Teaching a concept is different. Teaching the reason behind the concept is different. Because I'm explaining all the concepts with reasons. That's why some of the people who already learned these courses earlier, again they are attending. Because they are finding the reasons. They learned the concepts. But at the time they learned, they didn't find reasons for certain concepts. Now they are finding reasons in this course. That's why again they are repeating this training program. They spend lakhs of rupees for learning this course. But again they are learning. The reason is they are finding reasons behind some of the concepts they learned earlier. But those who are learning first time, you don't really understand the real value of this course. You might be thinking, okay, outside also everybody is explaining the same way. I'm also explaining the same way. You might be thinking like that. The another reason behind is it is a free course. Mostly we say, for a free course, most of the people will give less value. For paid course, even if it is not good, we give more value because it is paid course. You spend so much of money, lakhs of rupees you spend. That's why those who are learning first time in this free course, don't underestimate this course. It is not a course teaching you just like that. It is a course I'm explaining all the concepts with reasons behind those concepts. That is the reason why I'm giving you guarantee that you learn all these concepts with very strong fundamentals. Once you are very strong fundamentals, any new strategies you learn in future, you will understand easily. Sometimes you will be in a position to identify some new strategies. Who knows? That is also possible. Some new strategies. Maybe I am not aware. Maybe others are not aware. You may find them. That is possible. Because you are learning the concepts from the fundamentals. So let us get into such kind of discussion in depth in our last lesson, lesson 10. Probably in the middle of the next week, I will explain the last lesson by the time you complete all the practicals. And those whoever is still learning the classes, please complete all the classes. Do not leave him in a single point from my explanation. And those who are learning second time, by the time you already know the value, and especially those who are learning second time, they are the people learning sincerely, with lot of sincere they are learning. Even though they know many of the concepts, still complete video they are attending. They are not leaving. Some of the people are repeating even second time and third time for some of the videos to strengthen your fundamentals. So learn with this dedication. Probably you have only 2 more weeks left out before starting the second phase of the training program. And the second phase of the training program, you will be able to understand very easily if you complete the first phase of the training in a sincere way and practice with the sincere efforts. I hope you understand why I am expecting you to learn the concepts in a proper way, because the efforts I spend for this video, for preparing this video course, should not be wasted. You know when I will be happy? If you completely attend each and every point in my video and learn the course. I won't get the happiness. I get the happiness if you completely attend all the points in this course and then you are applying these concepts on the market and started getting the profits. At that time, I will feel the happy. Why you are learning? Ultimately to get good profits, right? That is the time. Then only I am successful. If you are not getting profits, if my training is not useful to you in getting good profits, then there is no meaning in spending all these efforts in all these days. I will measure my success only in that way. If you are appreciating, okay, video is very good, excellent, I learned very good, okay, they're all motivating. They will definitely motivate me to provide the next video content even in a much better way. That will motivate me. But they won't give the happiness. Those words won't give the happiness. When I get the happiness, when you are in a position to earn in a better way with the help of the content from my video and whatever the results I'm publishing from my software everyday reports, all together, if it will help you, then only I will feel happy. Hope you understand. Let us discuss more about all these points even more in the next video. Next video is fully dedicated for sharing my experiences and at least to motivate you in a better way. But this is the end of the practical sessions. Let us all meet our last video in our first phase of the training program in the next week. Thank you all for attending this video. Let us all meet again in our next video. Thank you.